So welcome to our first tutorial, and today we'll be focusing on accounting and the business environment. So our question for today is, Grand Majors Abram Moody had a partnership years ago. Recently, he opened his own business or his own firm as a proprietorship. The name of the entity is Grand Majors Abra Woody CPA. The business experienced the following events during the organizing phase and in its first month of operations. Some of the events were personal and did not affect the business. So we're seeing the events from February 4 to February 28. Now let's look at the requirements. Required, Part 1. Analyze the effects of the preceding events on the accounting equation of the proprietorship of Grand Majors Abra Woody. Part 2, at February 28th, compute total assets, total liabilities, total owner's equity, and net income or loss for February. Remember, you can follow us at Grand Majors on Instagram. And if you have any questions other than dropping them in our comments, you can also send us an email. So before we go any further, let's analyze the question a little bit, right? So the name of the owner, we'll say Abra Woody, but the name of the business, Grand Majors Abra Woody CPA, right? So we can note the first thing in the first sentence. He had a partnership years ago, but now he opened a proprietorship, a sole trader business. So now he's the only owner for this business. And you should be familiar with the differences between the type of businesses. And if you want, we could do a video on that. You can say it in the comments for us to know. But let's continue. So the name of this new business is Grand Majors Abra Woody CPA. A bit long, but let's focus. All right. So the events below in the organizing phase in the first month, and we're seeing it there. Only for February, we have information. And they made sure to tell us some of the events were personal and did not affect the business. And we know that in operating a business, we need to separate personal activities from the business activities, right? So we have understood clearly there. So let's go and kind of analyze part 1. Analyze the effects of the events above. And the major thing here, on the accounting equation of who? Of the sole proprietorship business. So not the partnership business that he had years ago, nor his personal activities on the sole proprietorship of Abraham Moody. So let's begin that. So it says, analyze the events, the effect of the proceeding on the accounting equation. What is the accounting equation? The accounting equation states assets equal liabilities plus owner's equity. And we can speak further in another video or search about what are assets, what are liabilities, owner's equity. But from the top off, like the obvious definition for assets, assets are items and resources that the business owns and that is used in making products and services or providing those products and services to consumers. Liabilities, what the business owes the people, right? Whether they're suppliers, whether the bank, the government in taxes, those are our liabilities. And our owner's equity, we can really call, those are claims, like the owner's claims to the asset. So the owner's investments that is made in the business, that's an example of owner's equity. So we're analyzing the effects on this, the equation of the proprietorship. So let's go a little further. So we're now being a little bit more detailed as before we knew what assets are. So we're giving some examples of what type of assets these activities might affect. This maybe is a few. We might have to add some, we might not use some, but these are just a few of the examples, and the date column is there just so we have some form of order and flow. So some of the assets that we might come across here are cash, accounts receivables, supplies, office furniture. As we go along, we may or may not include some more depending on the nature of the transactions that we have here. Liabilities or liability here is accounts payable, which is the most obvious liability, and we can characterize or accounts payable depending on the type of business that you have, right? Then we go over, we have a column, the capital column, and right to the right of that, we're seeing where we're describing the type of owner's equity transaction that it is. And there is a reason for this, because as I said, it's the owner's equities, owner's claims to the assets. And it includes, and in the accounting equation, it includes quite a number of things. It includes the owner's investment, it includes revenues, it includes expenses of the business, because purchasing of assets and daily expenses are different, right? And it also includes drawings or withdrawals that the owner might take from the business for his personal use. But as I said before, we could provide another video further explaining some of these stuff for you, but let's continue with the question. So now we know we have the accounting equation, and we've given a few of the examples of assets, liabilities, and we've made known of who, or the owner's equity, the capital, whose capital is it, right? So let's go. On February 4th, right, the owner received $75,000 cash from former accounting partners. So remember, yes, this person had a business before, but now, or he had a partnership before, so he was in business with more than one person. But now he is running a sole proprietorship business by himself, and we're analyzing that business. Keep that in mind. So you had a business before, now you have another one, and your former partners gave you $75,000. Would that affect the accounting equation of your new business? Would that affect your new business? No, because you just got money. They didn't say, okay, you got money and you put it in this business. No. So on February 4th, that transaction would not affect the accounting equation of the proprietorship of Grand Majors Abra Woody. So let's move on to February 5. Deposited $60,000 cash in the new business bank account. So here we're seeing, okay, this might have something to do with the new business. What is his new business? Grand Majors Abra Woody. And that's the accounting equation where we're trying to analyze the effects of, right? So if you deposited $60,000 in this new business account, it would definitely affect the accounting equation, right? And in this case, on what side of the equation we're going to be seeing some form of movement. It's cash. Cash is an asset, and we're putting money in the bank. So our asset is increasing, and our asset here is cash, right? The next side of this, what type of transaction is this, right? So remember, in accounting, if we're doing something on one side of the equation, something else have to happen on the other side, right? And it has to be the same effect. So if we're adding on the right, we have to add on the left for it to be balanced. Or else it's going to be balanced is if we're adding and subtracting on one side. And We'll speak more to that and you'll probably see that in another transaction to come. So here we're adding increasing cash and we're also increasing capital because this is the owner's investment into the business. And here, because we're doing something to Abra Woody Capital, we have to describe the type of owner's equity transaction it is, because as you said, owner's equity involves a lot of smaller details in it. So let's continue. On February 6th, we paid $300 cash for letterhead stationery for the new office, right? So letterhead stationery, this sounds like something permanent that you're going to always have for this business. So this is going to be some form of asset, right? And it said we paid cash. So we paid cash, so our cash, an asset, is decreasing, but we also bought an asset, another asset, letterhead stationery. This is supplies for the business. So cash is increasing and our supplies. No, so cash is decreasing, my bad, and our supplies are increasing. And here we're seeing we're on one side of the equation, but we're adding and subtracting. So if we were supposed to try to balance it or check it up, as you might want to say, we would find that both the asset sides and the liabilities plus owner's equity, it would be equal if we were supposed to sum it together. And please to remember in accounts or when generally putting things in bracket denotes that we are subtracting. Let's continue. On February 7th, we purchased office furniture for the business, agreeing to pay the accounts payable $7,000 within 3 months. What did we purchase? Office furniture. Okay, so we have an asset here, and our asset is increasing. But how did we pay for it? We agreed to pay for it 3 months in advance. So therefore, we're not using cash. So cash here is not decreasing because we haven't paid for it as yet. In other words, we're trusting it or we're taking it on credit. We're owing for this. So we're owing to pay it sometime in the future. So it's a payable. It's something that we're going to be paid. We're going to pay in the future. So it's a liability. And to pay the accounts payable, gave it away here within 3 months. So our office furniture is increasing by $7,000, and our payments to be made in the future, our accounts payable, is also increasing by $7,000. Let's continue. On February 10, we sold personal investment stocks, receiving $5,000. Okay, this is someone who's smart. They made investments, right? But does this affect the sole proprietorship business? Was it the stocks of the business? No, it was his personal stocks. He did nothing to the business or for the business because of this sale. So therefore, this event would not affect the accounting equation of the proprietorship of Grand Majors Abra Woody. Would it affect his personal accounting equation? Yes, but we're not doing that. So February 10th, nothing changes. Moving on to February 11th. He deposited $50,000 cash from the sale of the stock in his personal bank account. Again, he sold the stock, fine, but where did he deposit? In his personal bank account. Did he deposit it in the business bank account? No. So does this have an effect on the accounting equation of the business? No. So again, February 11th, nothing happened. The accounting equation remains the same. February 12th, someone told the business owner of their intention to transfer to give Grand Major's business to do on their behalf. Okay, this is good. We had some typo there, but I think we get the essence of it. But someone said, essentially, someone said they're going to be doing business with you. That's good and dandy, but have they done it? Did a transaction happen? No. So therefore, there's nothing to record. There's nothing to have an effect on the business. This is just someone saying out of their mouth, I am going to conduct business with you until they do a transaction, until they give you some money, or until you carry out a service or give them a product, then that would affect the accounting equation. So February 12th, nothing again. Let's continue. February 18th, conducted and completed services on behalf of a client and submitted a bill for accounting services $5,000. This is expected to be collected from the client within 2 weeks. So, Grand Majors Abra with the CPA conducted and completed services for someone. So, you did some work, right? So now you have earned some revenue from them, right? You completed the work. You earn whatever you were hired to do, whatever you were employed to do, you did it. So you have now earned whatever price that you told them that you were going to do the work for. And the price of this was $5,000. So you earned that money, but you haven't collected it as yet, right? So one, we know our revenue is increasing because we earned it. We did the work, but we have not collected the money. The simple fact that we have not collected the money, it means that our accounts receivable, money that we're supposed to be getting from someone to whom we have done a service or sold a product from. And because we have done that, that's increasing. So our accounts receivable will increase here by $5,000. What else would increase? We haven't received cash, so we can't say cash. And here, because we haven't received cash, accounts receivable is substituting cash here. What else is affected? Or revenue, right? Not because we didn't get the money, we earned that revenue. So our revenue is also increasing. And where in the accounting equation would we find revenue? Remember, we said in our owner's equity, we have owner's investment, we have our revenues, we have our expenses, and we have our withdrawals. So in this situation, our accounts receivables would increase by 5,000, and our capital, or owner's equity, would increase by $5,000. And describing this owner's equity transaction, we're describing it as a service revenue, right? Let's move on to February 15. We paid office rent $1,000. So in this case, money is coming out the business. We paid it. And because we paid it, it's not something we're looking to pay in the future. No, we paid it now. So our cash is decreasing, and our cash as an asset is decreasing, right? What else? What else is happening? We paid what? Office rent. So therefore, what is office rent for a business of this nature? Office rent would be possibly a monthly expense, right? So it means that our rent incurred, something is going to happen there. And where do we find rent? As I said before, rent would be found in our owner's equity, right? So our cash is reducing by $1,000, and because we paid the rent, right? We paid it, right? Or our claim our owner's equity would be decreasing, because what we said, our owner's equity is the owner's claim to the assets, right? And if your asset in cash, in this case, is reducing, it would mean that your claim to the assets, your claim to all your assets, is also decreasing. And really and truly, your rent expense is reducing because you just paid it. All right? So let's look at the last transaction. February 28th, withdrew $3,000 cash from the business for personal use. So off the bat, we know our cash is being reduced by $3,000 and for personal use. And we should remember that once an owner, especially from a sole proprietorship or a sole trader, the same type of business, just a different name. Once they remove cash, goods, whatever the case, from the business for personal use, we record that, or it is denoted as a withdrawal or drawings, right? And that is also found in your owner's equity. And if your asset is reducing, your owner's claim to those assets or owner's equity is also reducing, as we're seeing here. And we're denoting this transaction as what type of owner's equity transaction? A withdrawal, or slash, some people might write drawings. So we're finished with part 1 of the question. Part 2, compute total assets, liabilities, and such. All right. So here we had a nice table and we're finished. So we can sum it, because it's from this table that we're going to be able to tell our total assets or total liabilities and owner's equity, net income, loss, etc. So the first one, or total assets. So if we look at the table or assets, it's on our left side, and we're seeing cash, accounts receivable, supplies, office furniture. To find total assets, it would mean that we have to sum all this. So we sum them individually, obtaining 55,700, 5,300, and 7,000, right? But to get total assets, we would have to sum all of that. Going over to total liabilities. What are total liabilities? There was just one liability, and that was accounts payable. Adding down, we got $7,000. Total owner's equity, the same thing. We only had one column. So we're adding down, we got $61,000. Remember, our figures in brackets are supposed to be subtracted. So from that, our total assets would be $68,000. Total liabilities, $7,000. And our owner's equity, $61,000. The last part of the question asks us to find net income or loss for February. How would we find that? What we know about net income, and as the formula comes up, net income, another word for that, profit or loss, right? And how do we find profit or loss? Or revenue, whatever we've earned, the money that we've gotten from providing a service or a good, minus the expenses, the costs that we incurred to provide that service or to make that good available to our customers. So what were our revenues from the transaction here, and what were expenses? Let's go back. So we look, it won't be our assets or liabilities. And remember, we noted that what is included in our owner's equity? Investments, revenue, expenses, and withdrawals. So we're going to be finding our revenues and our expenses there. So we scroll down, we saw that the only revenue we had was service revenue of $5,000. The only expense we had was office rent expense of $1,000. So putting in those figures, we know that our net income or profits is $4,000. And that's the end of our question. So if you have any questions here, you can drop it in the comments below, or you can send us an email or DM us on Instagram. We'll see you for the next question.